Okay, I want to review the trades I took on the trendline break. The day is bullish. It has to be bullish if you're going bullish. So let's start from the day. The day is a bullish day. Well, let's check and see. Actually, the day chart is coming off of yesterday's bullish candle, and it's in the upper range of that, so I would consider that a bullish day. The day could turn red, though. This could be a red candle coming down, and that changes things a little bit. Looking for trendline breaks on that kind of pattern is good, though, because I like to see it bounce. We always want to see it bounce if we're bullish. 60-minute chart, clearly bullish here with everything going up. Trend lines, moving averages, I mean, are going up. It's a nice bullish pattern. So I'm looking for trendline breaks when they come back around and it comes down. So on the 500 tick, 1,000 tick, and 2,000 tick, those are the charts I use to take the trades. Usually the 500 tick chart, here we see right here, the trend line coming down this way. The red bar ignored right here. I got long and I stopped out as soon as it dropped a little bit. All right, so that was a little loss. Where'd I get? This was a bad trade. If I didn't take this bad trade here, where's the trend line break? There isn't one. What was I trying to do? Guess about it reversing up, and it did eventually reverse up. I could have done my trade here. It was a bad spot to pick that strategy. Sometimes I'll do a strategy other than the trend. I do a lot of different strategies, but trend line breaks are pretty popular. A lot of times I'll do a buy off the bottom strategy, which would have worked if I would have got it in the right place. Unfortunately, I did not. So that trade could have been avoided altogether. Here we have another trend line break right here. And you see I got long right there, but I did not wait for a red bar ignored. If I had waited for a red bar ignored, which I did there and got out up here, this trade was good. Here's another bad trade, which was another loss. It's good that I'm going over this because I really want to study this. Why did I get long? Sometimes, well, I think I got long because it touched it and it went back up, right? There was no red bar. It was no red candle ignored. It was just a test. And that's a test. And it went right back up and it closed a green candle. Now that's why I did that, because I didn't want to miss the trade. And right here on the one that worked, I saw that it was passing the red bar. Here's another red bar, and all these moving averages are coming up and expanding. They crossed over the trend line down here. I used this one as my entry, and I got out up here. Okay, so that's where we're at with that particular trade on account 8. Okay, let's talk about the trades on account 14. This looks like an area that I was not even looking. Decent little area I'm just trying to figure out where would I get in. Okay, it looks like the best place. I don't know. You see, in real time, watching it, you might try trades that you would never try after looking at it in review. I like the patterns here. I like this triangle trade. I like the breakout right here. But I don't see any red bar ignored. It shoots up and it creates all this red area right here. And then it puts in like a little bit of a pintail at the bottom of that last red candle and starts to turn green. I probably would want to get in right there. Stop loss under here, entry right here somewhere. So that's clearly a 2-to-1. I did not take that trade, however. So I just wanted to look at that. Here's a trade, bad trade. Why'd I take this in a range? It's ranging at the top part of the range. Came back down. I just stopped out really quickly, and we lost that one. Here we have a trend line break coming down this way, right? Here's a red bar ignored, right? I could have gotten long right there. I would have had my stop underneath, and I would have stayed in that trade all the way up. I didn't get in at that time. I waited for this to go up and come down and bounce, and then I got in right on the green as it starts to turn green. With my, I guess I still have my stop loss right there. We got out way up here for almost a 2-to-1 on that particular trade. All right. And there looks like there's some other great trend line breaks. Here's one with the red bar ignored under the trend line, which is also acceptable, right? Here's some more stuff there. if the trend line is too narrow, almost down even, you know, those, I don't like those as much. It's easier to get head faked on them. About a 45-degree angle, 35 to 55-degree angles usually work pretty good there. All right, so that's it. We are going to continue to work diligently on this strategy, and I will see you on the next video.